Good morning, everyone. Welcome. Bienvenue. My name is Robin Bootstock. I'm the head of sales for Sabre Virtual Payments. I'm here to tell you a little bit of why optimizing your supplier payments matters more today than ever before in the past, and how Sabre can help you do that. In a few minutes, Andrew Sims from Apizzo will join me on stage. Apizzo is our new partner in the virtual payment space. At Sabre, we're super excited about this new partnership, and we want to tell you why Sabre and Apizzo joining forces together on payments matters for the regions and matter for your business. There's no denying that making supplier payments is a complex process for any business. Today, there's a broad range of payment methods available across the travel space, ranging from the BSP, bank transfers, credit cards, you name it. But each of those forms of payments typically only apply to a subset of your suppliers. Each of these forms of payments requires a dedicated workflow. Each of these forms of payment requires specific processes. If you're a travel agent, you know that this can be quite a bit of a headache. However, all of these forms of payments on the screen at the moment, they can impact your payments business and your business overall in a big way, both operationally and financially. The long story short when it comes to supplier payments is that when you use a traditional form of payment, you're basically creating an exposure for your business. The main one is probably fraud. Fraud is growing twice as fast as GDP today and is a real pandemic in the travel space. Also, most forms of payments typically do not provide accurate transaction data. It's not uncommon to see the name of the traveler missing from a statement or the routing information. This makes reconciliation challenging and also prone to errors, which can financially impact your business. Also, suppliers do go out of business, and you may have seen some of the more recent announcements in the news over the last couple of weeks. And when they do, the impact can be quite dramatic in the agency community. Most traditional forms of payments only protect the travel suppliers against default, not the travel buyers. What that means is that in the event of a supplier defaulting, the travel agent can be greatly exposed. And finally, managing all of the different forms of payments in the back end can be quite challenging. You have to use the right payment method for the right supplier, because if you don't do that, either you run the risk of the transaction not going through, or you're in the risk of having your fare increased, or even receiving a fine at the end of the quarter. Overall, if supplier payments are starting to sound a little bit like rocket science, it's because they are quite complicated. I'm talking about the risk of fraud, I'm talking about fines, I'm talking about write-off, I'm talking about manual errors. It started to sound quite gloomy, but the reality is that payments can be a great opportunity in the travel space. In a moment where there's an increased competition in the travel space with pressure on prices and on margins, we know that optimizing your supplier payments can increase an agency bottom line by up to 26%. That's massive. However, in a recent study that we conducted, we realized that only a third of travel executives are actively measuring payments performance. Let's see how we can reconcile the two. Virtual card technology is nothing short of a revolution when it comes to the travel space. Virtual cards basically bring together all of the best features from the traditional forms of payments into one. Virtual cards work in the same way as traditional plastic cards. They offer the same benefits when it comes to broad level of supplier acceptance. They offer the same great benefits when it comes to the protection against supplier default. However, virtual cards have been created with payments control and process automation in mind. Virtual cards are generated with a unique single-use card number. What that means is that virtual cards are easy to track and therefore easy to reconcile. Also, virtual cards are highly resilient to fraud. They have a locked amount, they have merchant category control, and they have validity dates restriction, making them completely useless to seize. Basically, virtual card is nothing short of a revolution. However, the virtual card technology in itself is not a new thing. It's been around for the better part of a decade. The benefits of the technology, the use cases are very clear to everyone, and especially in the agency community. However, the main challenge resides at the moment in how you embed the technology within the agency processes. Sabre Virtual Payments has been created with this very specific thing at heart. Sabre Virtual Payments brings all of the benefits operationally and financially from virtual card technology together in a completely seamless experience. Basically, Sabre Virtual Payments happens in 3 steps. The first one, a virtual card is automatically requested as part of the standard agency workflow for a specific travel event with all of the security features automatically populated. Step 2, the virtual card is automatically generated at one of our 40 banking partners using credit or prepaid on behalf of the corporation or foreign agency cards. And finally, all of the data flows back into our tool, irrespective of the booking channel, irrespective of which bank the transaction took place in. All of the data is available in one place, automatically reconciled. It's that easy. With this product, if you are a Sabre customer today, you can be live transacting on virtual cards in just a matter of days without having to do any integration work, any development work. It's all easy, it's all seamless. Why is this approach really different than what traditional providers are doing in this space? The main difference is that Sabre is not a bank. Sabre is not trying to push you a financial solution. Instead, in building our Sabre Virtual Payments product, what we've really been doing is focusing on payments capability. What we want to do is give you the means to optimize all of your payments flows and drive as much value as you can on each of the transactions that you make. With Sabre Virtual Payments, you can work on virtual cards using your traditional treasury bank, or by using any of our 40 banking partners, or by doing both, because this is a purely multi-bank solution. You decide the way you want to work, and this way you can maximize the financial terms behind that solution. With Sabre Virtual Payments, you can work on prepaid, or you can work using a credit line, or you can do both, depending on the specific needs that your business has. Also, you can use and request out of our 100 currencies available on the platform, so that wherever you pay, whenever you pay, your business is protected against foreign exchange exposure. And finally, irrespective of where you pay, what you pay, when you pay, which bank you're using, all of the data is always available and reconciled. Oh, that's interesting. I've mentioned some of the benefits that virtual cards bring to the agency community. There are many of them. However, the real added value of virtual cards doesn't just limit to the agency. The value proposition of virtual cards ripples through the entire travel value chain, all the way from the end traveler that benefits from an improved reconciliation process and expense management process, all the way to the supplier, which can enjoy better working capital and better cash flow by receiving payments instantly. Corporations can also have greater control over their travel policy and reduce costs by the use of virtual cards. Ultimately, when virtual cards are in use, everybody in a travel chain wins. Virtual cards overall allow for safer, faster, more efficient payments where the cardholder can enjoy far greater financial benefits. Today, if you're a travel agent and if you're not using a virtual card solution, I think there's only one question that should come through your head at the moment is, what are you waiting for? Andrew, would you mind joining me on stage, please? Good morning, Andrew. How are you?
Good morning. Good morning, everybody.
So, Andrew, you're director. Yes. By all means, let's sit down. Yes. Thank you for your time, Andrew. You're a director at Appiso. Appiso is our newest partner in the virtual payment space, specifically dedicated to the Middle East region. At Sabre, we're extremely excited about our new partnership. We're very much looking forward to it. But before we begin, would you mind giving us a quick overview of Appiso and telling us why Appiso is different from some of the other providers at the moment?
Yeah. So thanks very much, and thank you to Sabre for inviting us to come and to speak with them today, and for letting us join their fold of international partners building virtual payments business. Appiso stands for Advanced Payment Integration Solutions. And we're a middleware provider that provides API and web-based technologies to enable travel companies and companies in other specific industry segments to get access to best-of-breed virtual card services. The story of Appiso actually doesn't start with Appiso as a company. Myself and my co-founder, Fouad Nounou, who's somewhere here in the audience, started building a company called NEC Payments around 5 years ago. NEC Payments is a card processor and a principal member of MasterCard, and our colleagues from MasterCard are also somewhere in the audience. The principal purpose of us building that company was to bring innovative technologies and issuing capability to focus on new payment segments. But we'd spent a lot of time developing that technology, and when we actually went out to market, we found that there just wasn't a layer of other partners that we could work with to address particular industry segments. And going out and talking to industry segments like the travel industry in particular, we found that there was this huge gap in the market of organizations wanting services and there being a real desire and need in the market for solutions that just weren't there. And that was where Appiso was born. We started by building a virtual card service as a part of NEC Payments, and it becomes such an important and integral part to our overall strategy that it became important for us to actually create a completely independent company to go and drive that forward.
Thank you. Andrew, today, when we look at the total agency payments market globally, it is valued at over $400 billion and growing very fast.
Yes.
Adoption of virtual cards is also growing exponentially in most regions of the world. However, when we look at here in the Middle East, we still feel that many businesses are missing out on the benefits of virtual cards. Can you tell us a little bit of why you think that is, and why do you feel virtual cards haven't necessarily taken their full shape here in the Middle East?
Yeah. This is what really perplexed us at the beginning when we started looking at this industry segment, was that there is such an obvious opportunity and there weren't people, or there didn't seem to be that much traction that was gaining in the market. And through our research, by going out and talking to end users and businesses that could use and benefit from these services, we really kind of uncovered two key factors that we could see. The first one is that there isn't that layer of specialist partners that are able to provide industry-specific solutions. There are international virtual card companies that have been active in the market, particularly in the travel space, trying to build a business, but they've not really had a regionally relevant solution. When you're working in the Middle East region where there are multiple regulatory jurisdictions, multiple currencies, and we're not covering such a huge batch of geography as perhaps we would be in more established markets like Europe, where we've got a single currency, and like the US, then bringing regionally specific countries and actually localizing those services into those markets is incredibly important. And one of the reasons why we think that adoption has been slow is because there just weren't that layer of companies bringing those services. There are banks that are providing services into the market themselves directly. However, when you're dealing with a bank tends to generally deal with its own customer base, and onboarding new customers into a banking relationship just for virtual payments is very difficult for them. And also the banks don't have optimized technology that's industry specific, and they don't have integrations with partners like Sabre that are able to develop and bring the sort of benefits that Robin has been alluding to earlier in the discussion. The other factor in the travel segment particularly that we think has been an obstacle, if you like, in bringing virtual cards into this space has been the slower take-up regionally here of OTAs and online travel agencies versus Europe and the US market. And the commercial dynamics of financially for an OTA business are very, very different from a TMC or from a traditional travel agency. When you're an OTA, generally you're reasonably cash rich, comparatively speaking, to TMCs and traditional travel agencies. And that cash flow benefit has enabled OTAs to really drive the use in virtual cards that are powered by prepaid accounts. And because prepaid is much more difficult for TMCs and traditional travel agencies in this segment, then that's led to a slower growth take-up. So these are the two main factors that we found, and these have been really the things that have fed into us and informed us as we've created our product and the commercial models that sit behind it.
Andrew, you were just talking a few seconds ago about currency, and I'd like to come back to that. Why is it important to offer virtual cards in local currency? And what are the benefits that this offers versus the use of the more global currencies like the US dollar or euro or GBP?
Yeah. So this is a really interesting question, and it's not until you actually get down into the detail that you start to realize the fundamental difference that you can make to the overall commercial model and revenue and bottom line by looking at currency usage and particularly FX, because the majority of businesses here will be shedding bottom line profit through FX in a number of different ways throughout their payment cycle. I think if you look at international currencies, which most of the virtual card companies that have come into market have been offering, then they're great for certain types of transactions. So if you think about a US dollar denominated virtual card, that works pretty well for a hotel payment in many cases. However, if you think about the large portion of your business that's on where you're required to settle in domestic currencies, if you think about your air ticketing and the fact that your BSP payment flows are all settled in your local currency, then using a US dollar virtual card to make those payments is just creating a further FX exposure for you that you don't have at the moment. And so being able to bring regional currencies, and by that I mean UAE dirham, Saudi riyal, Kuwaiti dinar, Bahraini dinars, Omani riyals, these currencies that you guys are out there settling your BSP settlement and other liabilities in day to day, by bringing those then we're able to offer a product which is suitable for a much broader range of payment types than just a US dollar denominated card. The other area of benefit that we can deliver is also if you think about the incoming funding that you're receiving. Many organizations in the travel space where they're making payments to suppliers, they're not making those payments in suppliers in the same currency that they're collecting funds from their customer. And so when they're aggregating those incoming receivables into a certain currency to make payment, again, there's an FX loss that they're incurring at that point. And so by providing an optimized solution so that you can receive money incoming from a customer, convert that into a virtual card that's denominated in the same currency, you can not only remove that FX portion, but also speed up the period of time that you've got before that money is available for you to make receivables.
So overall, a very unique differentiating point for Apizzo.
Yeah, very much so.
Today, Apizzo offers both prepaid and credit solutions. Can we please take a little bit of time for you to explain what are different benefits for customers to use those different types of solutions, and also how they can choose one or the other, or perhaps even both in some cases, to really optimize their payments operations?
Yeah. So this really comes down again to the fact that you're dealing with multiple suppliers, multiple types of transactions with your end customers, and multiple ways of making payments to customers. And so one size just doesn't fit all, and one size doesn't fit all types of travel companies either. There are some companies like OTAs that I was mentioning earlier on that are relatively cash rich in comparison to TMCs or traditional travel agencies. They may be able to use a prepaid solution. And so if we take and offer them a credit-only product where they don't need credit, then you're introducing a layer of complexity and cost that actually is of no benefit to them. And the same on the other side, if you take a prepaid-only solution and offer that to a TMC that's already extending a significant amount of credit to its own customer and has a longer receivable cycle, then they're probably not going to have the working capital to be able to offer credit on one side and prepay on the other side. And so really where our solution starts to deliver real benefits is by working with our customers in a consultative way to understand the dynamics of their business, their requirements, and the cash flows to come up with an optimized solution that uses prepaid credit or a mix of both to give them the best of all worlds.
So overall, there are working capital, cash flow, and revenue benefits which are quite clear from the use of virtual payments. But what else you feel makes virtual cards a better alternative to the most traditional forms of payments?
Some of the things that you touched on in the slide earlier on really bring these points out. So every travel company that we've spoken to over the last 2 years while we've been developing this product has spoken about the very heavy workload that they have in financial control and reconciliation activity and the burden and the cost that that brings. And so the concept of creating a scenario where you can have a single purchase, a single invoice, and a single payment for that enables straight through reconciliations to be able to build. It enables us to vastly improve exception handling and provide a solution that overcomes some of those nasty things that happen when things just don't go right within a transaction flow, voids, refunds, etc., etc. On top of that, the automation and integration that comes through having a GDS optimized solution. So if you're a traditional travel agency or a TMC, being able to work within your GDS workflow seamlessly and create a payment in the same way as you would do for BSP is super important. But also having that API level of integration for OTAs or organizations that have got more sophisticated technology and want to build in requests via their booking engine or via their, or taking reporting back into their ERP system just helps to add value. And these soft dollar benefits are what not only reduces cost on the bottom line and increases profitability, but it also enhances the seamlessness and performance of your organization. And faster performance means you can do more top line as well as improving the bottom line.
Thank you, Andrew. I mean, just to conclude, at Sabre, we're tremendously excited about our partnership. And but can you maybe tell us from your perspective, what do you feel this partnership is going to help us bring to the market? And what is, from your Apiso perspective, what are your plans for the region?
Okay, so, I mean, likewise, there's a huge amount of synergy between what we at Apiso are trying to create and the vision that we've got and the vision that Sabre have for virtual payments in the region. I think the real benefits for Sabre as an organization is that we bring that regional relevance. We're a local partner on the ground that can deliver currencies and solutions that are suitable for the market dynamics in this part of the world. From our perspective as Apiso, then working with Sabre enables us to bring that GDS optimized workflow and that ability for our customers to be able to continue to use the tools that they're used to using over the last X number of years, but still avail the innovative technology and financial services solutions that we're able to bring. But I think what we're most excited about is how innovative products like this can help you to improve your businesses. And helping you to improve your business can make you more relevant to your customers, help you drive your top line, which again, it helps you to continue to work with us and we build a business as we move forward together. Thank you.
Thank you, Andrew. We're very much looking forward to it.
Yeah, great. And so we're available. We have our Apiso team that are here on the ground. So if you would like any further information about our services, then please talk to us. And also the Sabre Virtual Payments team are available for face-to-face one-on meetings in the Hatta meeting rooms, which are just on the first floor on the other side of the corridor here outside the arena. So thanks very much.